Money Talks. I'm Mia Lee, escort, stripper, CPA, and recovered banker. I had originally intended this to be a Q&A episode, but I got so many questions about LLCs and the pros and cons and the new rules around them, so I'm gonna make it its own episode. First, a lot of people ask me to talk about the pros and cons of opening an LLC as a self-employed person. The primary benefits of registering an LLC or a limited liability company are limitation of liability and tax savings. I'm going to talk about each of these separately. Limitation of liability is really applicable if, say, you're a bakery and someone might slip and fall or get food poisoning and sue you. You want to limit your liability to the assets of the company and not your personal assets. This is applicable in the adult industry if you own a dungeon or if you run a strip club, because someone could get injured at your business and sue you. But if you're an individual service provider like a dancer or an escort or a pro dom, or a cam model, it's not that applicable because I've literally never heard of a client suing a sex worker. If you have, tell me about it because I want to know about it. I just can't imagine any of my clients ever suing me. I can't imagine any of your clients ever suing you if you're just an individual service provider. They don't want to put their names on record in court, neither do I, and it's probably just not going to happen. So limitation of liability is out for most of us individual service providers as a potential benefit to incorporating. Now let's talk about the taxes. This is specific to S-Corps only. Single member LLCs are essentially a pass-through entity, meaning that there's no difference between paying taxes as an unincorporated sole proprietor, which is what I am, or having a single member LLC, because the LLC earnings will simply flow through to your individual's tax statement. But S-Corps can reduce your self-employment taxes by allowing the owner to split their income between salary and dividends. Self-employment taxes are the portion of Social Security and Medicare taxes that would be paid by an employer if you had a W-2 job, so you just wouldn't see it, and the employer would pay it for you. But self-employed people have to pay this portion of taxes ourselves. By splitting earnings through your S-Corp between salary and dividends, your salary is subject to self-employment tax, but your dividends are not. Dividends are just taxed like ordinary income without self-employment taxes. The caveat is that you have to pay yourself a reasonable salary for the service that you're providing to the company. What does that really mean for adult entertainers? I have no idea. I'm not an economist. I don't know what a reasonable salary through an S-Corp for like stripping or escorting. I know that some sex workers like to have S-Corps because that reduces your self-employment tax. The other thing to consider is that self-employment taxes are only applicable up to a certain earnings amount. I think it's something like $150,000. Don't quote me on that. After this earnings threshold of say $150,000, maybe $160,000, you're not paying self-employment taxes anyways. At my tax bracket, which is much higher than $160,000 a year, I've already paid all the self-employment taxes up to $160,000. I don't owe them on income above and beyond that. Another reason why I'm not doing the S-Corp thing, allocate between salary and dividends, is because if I'm earning low seven figures, I can't justify paying myself a salary of less than like $100,000 a year and just taking that balance in dividends, because what's a reasonable salary for my business, right? It can't be 10% of what the business earns as the sole owner of a business. That's my take on that. Another thing that I've been asked is whether or not having an LLC legitimizes your income as a self-employed person. I would say no in the adult business, right? So again, running a bakery, then yeah, sure, it makes sense to have a corporation, and that does maybe legitimize your earnings as a bakery. You get a tax identification number for the business, you can pay employees that way. But as adult businesses, having an LLC in and of itself doesn't legitimize your income. What legitimizes my income is paying taxes and depositing my cash and not keeping it under my mattress, and telling the bank that I work in adult entertainment and not lying and saying I have an event planning company or I'm a consultant or something like that, because that tends to delegitimize your income and not make it more legitimate. If, say, you are an escort like me and you register an event planning company, lying on your taxes and to your bank makes your business less legitimate, not more, and it exposes you to higher risks of audit and account closure. A few years ago, I got some kind of compliance inquiry, or my relationship manager did, with my bank. There were a lot of cash deposits and payment apps, and I was buying ads. Had I been lying about what I do for a living, this would have been a major problem for me with my bank. They might have closed my account. But because I had told my relationship manager I work in adult entertainment, there's a lot of cash income, I pay all of my taxes, and I had provided all the relevant information for my personal account, he was able to just resolve that for me without even coming back to me. I think he mentioned it to me in passing after this happened. That's the only reason I know that there was a compliance inquiry on my account. I want to now pivot to the new filing rules and fines for LLCs for the upcoming tax year. Well, I got this question in 2023. The upcoming tax year is now 2024. These new rules. Starting January 1st of 2024, there's a new rule that all LLCs, corporations, and similar businesses in the United States have to follow. they need to tell the government who really owns the company by filing a report with FinCEN, which is the Treasury Department. And this is because of a law called the Corporate Transparency Act, or the CTA. The idea of this law is to make it clear who's behind these businesses, which helps prevent money laundering and other illegal activities. So if you own a business and don't do this, you could face big fines. And these fines are escalating. They're about $500 per day, up to $10,000 per violation, and possible jail time of up to 2 years for people failing to file timely and properly comply. If your business was around before 2024, you have until January 1st, 2025 to file your first report. If you start your business in 2024, you have 90 days from when you start to file. Any business starting on or after January 1st, 2025 needs to file within 30 days. This applies to most privately owned businesses, no matter what the reason for starting them or what kind of business they run, but most family trusts are off the hook unless they're directly linked to a business that needs to report. Another thing is that on December 22nd, 2023, New York Governor Kathy Hochul enacted the New York State LLC Transparency Act, which is in addition to the federal compliance requirement because it's just for New York State. Effective December 21st, 2024, the New York State LLC Transparency Act requires all LLCs in New York to disclose the personal information of their beneficial owners to the state's Department of State. Beneficial owners are defined as individuals with substantial control or at least 25% ownership in the LLC. The required information includes your name, date of birth, business addresses, and the identifying number from the approved documents. That's basically just a tax ID number. That one doesn't really matter so much. LLCs existing before the law's effective date for the New York law have to comply by January 1st, 2025. Non-compliance could lead to the LLC being marked as delinquent and a potential $250 fine. That's on top of the federal fines. Unlike the Federal Corporate Transparency Act, the New York law makes the beneficial owners' names publicly accessible, highlighting New York's emphasis on business transparency. Let's talk about the really scary implications of this. Major privacy concerns here. The Act's public disclosure requirements pose really big privacy risks. If you register your LLC and you're operating in New York, a client can just look you up and they can find your legal name, which is not great as a sex worker. In addition to the privacy concerns, there's the compliance and legal exposure. If you are adhering to these laws, you're at risk of non-compliance and major fines and even up to jail time. This is very, very risky. And this is another reason why I will never incorporate, I don't want to say never, but probably I will never incorporate my sex work business. If I had a non-sex work business, like a bakery, or even if I was selling like merch, right? Even if that merch was related to my sex work business, then I would probably incorporate because I don't have as many concerns about that business being subject to public disclosures and whatnot. That's all I've got for you on LLCs and the new rules. I'm sure there are more questions about this. Please drop comments, questions, suggestions. I will answer them. I'm Mia Lee. You can take the girl off Wall Street, but you can't take the banker out of the court. Thanks for bearing with me through a really technical topic. And thank you for listening.